Hey everybody, welcome back to another video. So today, Robinhood, the much followed and tracked retail investor trade, and I'm sure some institutions are in there too, are set to announce their first ever earnings as a public company after the close today, Wednesday, 18th of August. So please make sure you watch this video beforehand because we're going to go through what to expect from the set of earnings. So let's get straight into it. Now, like we said, this is their first earnings since their debut in March. So Robinhood listed at the lower band of their price range, which was $38. We've seen some crazy times since then, and the share price at one point was at $71, and now it's sitting at $48. So we're still about 20-25% up from our IPO price. So Robinhood is doing well, but these earnings are going to be key because obviously we get a bunch of data on the S1, which I'll share a few screenshots of now. But this is the first set of filings we get in terms of earnings and versus estimates. So let's see what we're looking for. So the market is looking for an EPS which is a loss of 26 cents per share. That's what they're looking for 2021. So we need to keep an eye on that. And we're expecting revenue to rise. We want to see that revenue is going up, okay, naturally. So we're going to make sure this is a high growth company. We can accept the EPS loss as long as we're getting a good stable base of revenue growth and user growth. And that's where this figure comes into it. Net cumulative funded accounts. So we're going to go through this. But in essence, Robinhood defines an account as net cumulative funded if it's an account ready with money in it, ready to buy options, stocks, etc. So this is an important one for us to measure Robinhood's user base. Okay. Now, let's take a look at the expectations in this view. Let's put me out of the way. You'll be over there. So, like I said, their earnings per share in Q1, so that was in the first quarter of 2020, was 23 cents loss, GAAP EPS. That then widened to $6.26 the following year, still Q1 in 2021. And obviously they had exponential user growth since then and a whole bunch of marketing and other bits and pieces which they had to deal with. The Q1 in 2021 also, so that's Q1 2021. And their estimate for Q2 is their 26 cents per share. Now, don't forget, Q1 had the whole GameStop saga, and we know they were fined by FINRA. I think it was $65 million. It was the biggest fine FINRA has ever given. So naturally, they suffered during that quarter, given what was going on, and they had to raise a lot of funds, and they brought in a lot of investors, raised a lot of debt through convertible debt notes. So it wasn't the best of quarter for Robinhood, but they've made it, they've IPO'd, and now everybody's looking towards these earnings. So that's what we want to see on the earnings per share. We want to see 26 cents loss per share, adjusted EPS. Now on the revenue side, going back to Q1 2020, we were only sitting at 127 million revenue, okay? And now that grew to Q1 this year, before the IPO, to 522. And that's the figure they were using. We know they benefited from a lot of the retail saga that was going on. A lot of people created new accounts and starting investing for the first time. And now we're expecting that to go to 559 million in Q2. So that's what the analysts are expecting. That's what we're going to be looking for when they announce their results. We're going to need a beat. We're going to need a beat on these metrics for this volatile market, which we know we're facing right now. It's a very uncertain market. For it to move at all, that's what we're going to need. And then thirdly, what I mentioned was net cumulative funded accounts. And these are measured in millions. Again, going back to Q1 2020, it was sitting at 7.2 million net cumulative funded accounts. That grew phenomenally, 3x, to 18 million in Q1, so at March point. And we want to see a growth on that side. How much growth? The analysts are yet to decide, but we want to see a healthy growth on that. We don't want to see that going backwards by any means. No, we don't necessarily need to see a triple again, like it did from the 7 to 18. A double and a half, but, we want to see a healthy growth. Now, some of the other metrics we'll want to look at, and these are available in their S1 filings, are monthly active users. This is a very typical metrics. A lot of the SaaS companies and technology companies will use, social media accounts will use it. Now, obviously, the net cumulative funded accounts is a better measure for Robinhood because it tells you how many accounts are there, which users have created, they've put money in, and they're ready to buy options or stocks. But the monthly active user is also very interesting because it's telling you how many people are actually using the app. What if you just have a funded account and you've never used Robinhood for 6 months, you just created an account, you've left £100 in there, is classified as a net cumulative funded account, but you're not actually active. So we need to look at these in tandem. Okay, and in Q1 2020, that sat at 8.6, and in Q1 that grew to 17.7 million monthly active users. So we want to monitor that indeed. The next metric we want to look at is something called ARPU, and that's called the average revenue per user. Now, a lot of you who've invested in tech stocks already will know this. It's a very important metric. It's the average revenue per user, right? And so in other words, if you're in a retail shop, you've probably heard of average order value, right? That's the amount of customers are ordering on average. How much are they spending? It's the same for these technology companies. You have something called average revenue per user. Now, in this instance, Robinhood started with, well, not started, but in Q1 2020, they had $82.9 per customer spent. Now that grew to 137, which was impressive, and we want to see the same trend carry on. Okay, so we're going to be looking out for this revenue. So far, what have we got? We're going to look at the EPS. Obviously, that's going to be the headline numbers. That's what they're going to talk about on CNBC, and the market's going to move or not move. And they'll look at revenue. The third one we're looking at is cumulative net funded accounts. We want to make sure we're keeping on those net funded accounts. They've got to be growing nice and steadily. Then we want to take a look at the monthly active users. Now, following that, then we want to take a look at these different things from their S1. Now, you can see these are the figures which I was just presenting to you. This is lifted straight off their S1 document, and you can see the trend. That's exactly what I said. Net cumulative funded accounts has gone from 7.2 to 18. We want to see a tick up. The monthly active users, 8.6 to 17.7. We want to see a tick up. Okay, very important. Now, there's another metric called assets under custody. So this is a very important one. We spoke about this a little bit with Coinbase, which is another investment of ours. And with these guys, with the assets under custody, this is the amount of assets which they own, right, on the platform, because people have bought them and therefore they've bought them on their behalf and stored them. So equities, you can see the majority there, 11. So if we look at the 2020 figure there on the right-hand side, that's Q1 2021, 65. You can see that in millions. So that's 65 billion in equities. Okay, and you can see 11.5 billion in cryptocurrencies. Options are 2 billion, and you can see 7 billion of cash in the users' accounts. Okay, this is an important metric. We want to see this grow because ultimately this is the volume on which Robinhood is making their money, and we're going to come on to how they're making their money very shortly. But they need assets under custody on the platform because that's what people are trading with, whether it's their stocks, their cryptos, their cash. They need that amount to be growing, okay, because that's their economies of scale. So currently you can see the total is 80 billion. We want to see that tick up, but we also want to see that diversified and not so heavily in equities. We want to see good growth in options, a good growth in crypto, as you could see there from 2020, which is $500 million, to 11.5 billion in 2021. That was phenomenal. I presume, based on the Coinbase earnings, we're going to see healthy growth in that area, but I don't think it'll be as explosive as we saw from 2020 to 2021. Okay, so that's your assets under custody. Very important. Now, coming on to this section here. So this is looking at their revenue. So the next thing we understand is, did they hit their revenue? Fine. Now we need to understand, how did they hit their revenue? And we all know there's a lot of fanfare around how Robinhood generates their income. So we've discussed this before. Robinhood generates the majority of their fees through what they call transaction-based revenues, which you can see there on that screenshot. Now, we go, hang on a second, Robinhood doesn't charge transaction fees. It's 0% commission, right? It's commission-free trading. Well, whenever anything is free, and I've spoken about this before, whether it's social media on Facebook or Twitter, nothing is ever free. You're selling your data. And it's no different in this case. You're selling your data here to Robinhood, who's taking your trading data. So when you place an order to buy 5 shares of Tesla at this price, they're taking that data and they're selling it to market makers. Okay, whether that's Citadel or anybody else, they're selling that data. Virtue Financials, any of these market makers, they're selling that data to them so they can take that data and front run you guys, and they'll know what's going on in the market. Now, we want to see a diversification away from payment for order flow. So Gary Gensler, the chair of the SEC, it's on his radar that he wants to look into this payment for order flow because it doesn't seem ethical to do it, and he wants to protect the consumers and the retail traders. So there's a lot of risk around Robinhood because if that area of their revenue becomes regulated, we're looking at a heavy chunk of their revenue. So looking at that, of the 522 million they've done there in revenues, they see more than 80% is from transaction-based revenues. You can see that 420 right there, 420 million of the 522 is coming from transaction-based revenues. Okay, the interest revenues are very small, and the other revenues are even more negligible. Okay, so this is a transaction payment for order flow business, and this is very worrying. So we spoke about Coinbase and how they've managed to create other income streams. Robinhood has to do the same, and it has to show the growth in that. And this is gonna be a key earnings to see if we have that, or if this is still a payment for order flow business. And if it is a payment for order flow business, I feel like the market is going to treat it very differently, because if Gary Gensler is looking into it, people are not finding it an ethical approach, then this is going to be a challenge for Robinhood. Then after that, once we've understood the revenues, we then want to spend some time looking at the OPEX. Okay, that's where we want to see, is OPEX increasing in line with the growth in revenue, or is it outpacing revenue? So we don't want to see any carelessness in the increases in brokerage, in transaction, in the technology and deployment, and specifically marketing. Because what you find is when companies, and we saw this with the Deliveroo, and we saw it with Just Eat, which I broke down on another video, they spend a lot of money disproportionately on sales and marketing to capture the market share, and revenue increases to hit the target, but not as much as the amount they spent incrementally on sales and marketing. Okay, so there you have it, guys. That's what we need to see from Robinhood's earnings coming out after close of play today. Let's focus on the EPS. We want to make sure we are beating the EPS figures of 26 cents per share. We want to make sure we're growing on revenue. We want to see the net cumulative funded accounts going up. We then want to look at monthly active users. We want to see a steady growth in the monthly active users. We want to take a look at the average revenue per user, make sure that's growing nice and heavily. And then we can look at, okay, how is revenue coming in? Is this company still fully reliant on payment for order flow, or have they managed to diversify? Have they created any new product lines? Do they have any ambitions for that? What's the guidance for Q3? These are all really important things which we need to look at and understand if we're investing in Robinhood. Like I said, full disclosure, I don't have a position in Robinhood currently. I have a position in Coinbase. I'm intrigued to build a position in Robinhood if the time is right and the price point is right. It ran away. I stood back at the IPO. I mentioned that on the videos. It ran up to 71. It's come back down. And I'm just waiting for it to stabilize. The first year of any new IPO is always hectic, but I'm still interested in these earnings nonetheless. So there you have it, guys. A breakdown of what to expect in Q2 figures for Robinhood, their first since filing for their IPO. We'll see you in the next one.